What is up, everybody? Welcome back to another episode of Lucid Daily. And today I kind of wanted to break down my spreadsheet with you guys. I know that I've been talking about this for a while and kind of doing a recap on a fundamental analysis and not only just kind of going over the headline numbers of what Lucid did do in Q1, but kind of going over everything involved with Lucid regarding their revenue, their expense on sales, their R&D, their SG&A, and we're going to extrapolate it and do different scenarios if they sell 6,000 cars, 10,000 cars, 50,000 cars, 100,000 cars, and so on. So we're going to go ahead and dive into all that. If you guys have any questions, I'd love to chime in. And yeah, let's go ahead and jump right on into this live stream. And so first off, you can kind of tell a little bit of the difference from this quarter from the previous information that we had. You can kind of see things that have gone up. So for example, R&D with the numbers that we had from last quarter, R&D, and these are numbers that are all extrapolated. So this is a scenario if Lucid does 6,000 car, like based off their last quarter, if you were to multiply that before, that's how much they would have spent in the year. So this year, their R&D went to 600. This quarter, their R&D went up from 654 to 744. So that was obviously a significant jump in. Not too big of a deal, but yeah, Lucid had a great day today. We'll cover all the stock prices and everything like that. So we have the SG&A as well. SG&A hit 787 last quarter, and this past quarter hit 892, which is substantially more. And then so our total expenses, this is off by about 200,000 actually. It's actually off by about 200 million, which in the grand scheme of things, it's not that big of a deal just because their expense on sales actually has a negative margin right now. But when you're working with a smaller number like 6,000, it's kind of difficult. Lucid was selling their cars for about, if they sold 300. So if you we can do this math together. I just want to do this as math so everybody understands. So here's their investor sheet. Let's go to their revenue. I won't zoom in that much. We'll do revenue, which is at 57 million divided by cost of revenue. And you can kind of tell for how much they're selling each car for, just to get an easy number. Now, with only 300 cars, that's like hard. It's not a very good scale at all. So if you take $245,970 and then divide that by 57,675. Whoops, I did that backwards. 57,675,123. There you go. Divide that by 245,970,123. Whoops, I did that backwards one more time. Let me try that again. 245 million divided, 245,970,000. You divide that by 57 million. 57. I'm a little off. Whoops. What number am I missing? You guys are getting inside look on how I do this math here. Let me just pull up. No. Let me pull something else up. Okay. 245,000. 240. Actually, I'm just gonna try one more time. Okay. For cost of revenue, I had this number. It was like 160,000 per car. Oh, I'm dividing 245. Oh, okay, that's why I'm dividing the wrong numbers. 257 million. No, it's 57 million. 57,675,000. 1, 2, 3. Divided by how many deliveries did they have? They had 360. So you take that number divided by 360 and you get $160,000 per car. That's like if it's all automotive revenue. I don't know how much revenue comes outside of automotive. They don't really break that down yet. Hopefully they will in the future. All right. So their margins are obviously negative right now, which, I mean, right now I have it just at 90%. And then their net income was obviously bigger than this. Their net income, where was it? Net income and comprehensive loss. That was the trailing. So that was 81 million. So if you take 81 million multiply that by 4, you get 324 million for net income, comprehensive loss. So the total expenses was 2.3 billion, right? Let's double check. This is, you go through this and you double check. Where is it? So that's their total cash of 5.4 billion. So their loss this last quarter, now stock adjusted EBITDA is a negative 383. So if you take that 383 multiplied by 4, you get that 1.5 number, and that's where you get that negative net income. So our spreadsheet is actually, we're going to go through everything today. I just want to kind of get through the spreadsheet first, and then we will talk about exactly what went on. I've not dived too far into the Lucid news today or anything, but Rivian did sound like they had a really good earnings call last night. So we'll break that down while we're live as well. Cool. So, and then their shares outstanding increased by by 1 million shares from what I saw. Let's see. Yeah, the shares outstanding increased by 13 million. Cool. So let's extrapolate this, and we're going to use these numbers from now on because I think these are going to be the most accurate. Can I hide these? Hide sheet. We're going to hide sheet. And we're going to do these numbers until Lucid's profitable. Okay, cool. Now let's go over their delivery numbers really quick. On deliveries, they had 316 Q1, 300 in April alone. Now, Jenny from the blockchain actually on Twitter broke down how much deliveries they need to hit per month in order for them to hit 11,000. So if they do 300 April, 700 May, 900 June, 110, 1,100 in July, 1,300 in August, 1,500 in September, and so on. I don't know why they would go down necessarily in November to December, but who knows? That gets us to about 1,100. So yeah, not 1,100, 11,000. Do we know how many cars they need to deliver per quarter to break even? Break even on expenses. Let's do that math. So we'll do break even in terms of net income. So they need to sell $2.3 billion worth basically at a 90%, but we're going to extrapolate that a little bit. So let's say we're going to get there, and let's go ahead and dive into, let's say they deliver 11,000 cars. 11K cars. And then we're going to bring these margins down just a little bit. We're going to bring them down to 85. So they're walking away with about 15% profit on each car. And we're going to keep that 139,000 number. And we're going to say that they deliver 11, 1, 2, 3. Cool. So let's say they deliver 11,000 by the end of the year. That's a total revenue of 1.5 billion. And then 85% margin. Their expenses on that was 1.3 billion basically. So they walk away with 200 million. R&D we're just going to say that it stays the same throughout all the quarters. It may fluctuate up or down. And there's still negative 1.4 billion. So even they're going to have to deliver more than 11,000 cars, which is fairly obvious. And that gives us a negative EPS of about 84 cents. So let's keep going. Whoops. Go away. Okay. Let's duplicate this. And then we are going to do, let's do 20K cars. Take away this. All right. Let's do the math on 20,000 cars. 20,000 cars, and let's say they get their margins down and they're making 20% on each car. So you can see that their net income gets better compared from the last quarter. It was negative 1.4 billion. their net income is negative 1 billion. So they're still losing money, but it's getting better. And we're just assuming that everything stays the same. And I'm not including a tax rate because I have no idea what kind of taxes Lucid's going to get in terms of any kind of tax breaks being an EV company or anything like that. So I'm giving them the benefit of the doubt on this. All right. Negative EPS of 65 cents. So they're not a money-making company yet. We're going to duplicate this. We'll rename it. And we will do, let's just go straight. Let's go to 50K cars. Let's do 50K cars. And what's the price on, I always forget the price on their Grand Touring. Actually, at 50,000, they better be cranking out the Air Pures. Reserve. Let's just say 100K, just because we'll actually take the average because they did say they have a good mix. So let's do 139 plus 95 plus 77. Divide that by 3. Yeah, that gives us about $103,000 per car. So we're going to say that once they hit 50,000 cars, they're going to have about $100,000 per car. And I've been saying from the beginning that this is going to be one of Lucid's strong suits, is the fact that they have such a high average selling price. All right, 50,000 vehicles, that brings in total revenue of $5 billion. Let's say that they get their margins and they are at 75%. So they're making, that's 76. Let's say they're making 25% on each car. And they're so close to being profitable. That's 386,000 right there. So negative 386,000 net income. And that's assuming that their R&D doesn't go up, SG&A, and their expenses, they have a 25% expense margin. That gives them a negative EPS of 23 cents a share and still no earnings. So let's jump to 150K cars. Actually, no, why would I jump to 150K? Let's say that the year is, I don't know what the year will be, but let's just change this to 100. Let's change it to 75K. Let's see if Lucid becomes profitable at 75K cars. And we're going to we'll change this down to 95,000, and let's change this to 75. What was that? Was this one 100,000, 50,000? So you see a huge, oh, whoops, that's why. I was like, why did we see a huge jump like that? $95,000 a car at 75,000 cars. That gives you a total revenue of 7.1 billion. Let's say they get close to a 30% margin. 5 billion. So they finally have net income after net income before taxes. I don't know what their post-tax will be. That gives them a profit, a net income of 429 million and a 26 cents a share earnings per share and a 26 cents EPS, which if they're at trading for a 75 PE makes their share price could be around $19. So I think that's 75,000 cars. I think that their expenses will be higher, especially because they'll be ramping other vehicles, they'll be ramping a factory and things like that. But this is when Lucid starts to teeter on the edge of profitability at around 75,000 cars a year. And that's excluding all of their revenue, but that's also excluding all of their taxes plus all other costs plus tax. So what's Lucid trading for today? 15%. So let's just go to 20%. I mean, $20. Where's $20 right here? So it's about a 22% increase from where we are now. So it's like a 20% increase. So that is interesting. I'm going to put a little profitable EPS. Okay, so that just makes so I can remember. And we're gonna and we're gonna add another sheet at 100,000 cars. Duplicate, and we're gonna do rename. And we'll do 100K cars, and let's say that they have the Project Gravity and they stay at 95,000. That car's gonna be expensive, but hopefully they're moving more air pure. Okay, revenue per vehicle at 95,000. Let's say they go up to 100,000. 1, 2, 2, 3. 9.5 billion in revenue. Let's say they find. Let's say that they stay at a set. Like they're making 30%, which I think they'll make a lot. I don't know. Their cars are already very high priced. Like I think that they do have a potential for that. Could be wrong though. Expense 6.6. SG&A are. I think these will go up over time. I'm so confused as to why they would make Project Gravity rather than a crossover. That is a good question. The Model Y is so popular. That is a good question. I wonder when we'll see a crossover. I don't know. Where would you price a crossover though? That's the thing is there's not very many luxury crossovers. There's a lot like the Model Y. It is a high price point, but usually you don't see too many luxury crossovers. You kind of see luxury sedans, and then you jump to luxury SUVs. That's an interesting thought. I'll give that some. I'll think about that. Okay. Revenue per vehicle, 70%, 1.2 billion. They have an EPS of 73 cents per share. PE of 75. That brings us to about $54 a share. Okay. And then let's say by 2030, they have 500,000 cars on the road. This will be the last one we'll do. And then we'll talk like current event stocks, current event stock market with Lucid. I just kind of like doing this just because I think it is important. We'll make it cool. All right. So let's say change that to 500,000, and we're gonna bring this down to like 90,000. I have no idea what kind of cars they're going to be selling when they're selling 500,000. That's both their factories at max capacity and max demand for as far as we know. That's 45 billion in total sales, 31 billion expense margin, 70%. It may go down. I don't know. Net income of 11 billion, EPS of $7. That gives. So if they can keep their costs low, which obviously is a lot easier to do on a spreadsheet than in real life, then that gives them an EPS of $7.11, which is a share price of $533 at 500,000 cars. So do with that what you may. I just think it's really interesting to kind of extrapolate their numbers like that. And yeah, their reservations, I was 1,250 reservations off from what they had, which is still a really good increase. So we have our reservations secured for 2022, and hopefully we can get them secured for 2023 next quarter. That'd be great. What's a 20% increase from 30,000? Let's see. 30,000 times 20%. That's another 6,000. So 36. I don't think demand will be their problem for a while. They advertise like crazy. All right, let's go ahead and check Lucid's. So hopefully you guys enjoyed that a little bit. Whoops. Did not remember for that to happen. All right. Hopefully you guys enjoyed that. Let's go ahead and check Lucid stock price today. Today they had a 13% run during the day, and then they ran 1.2% in the after hours. So they had a really good day. It looks like Rivian helps them out. Usually there's some article about Motley Fool. No. Okay. So why other EV stocks? Is it because of Rivian? Let's see. Fisker, Tesla did not run, I'll tell you that much. Specifically, Thursday's rally can be a tribute to the fact that a peer that released its results on Wednesday night mirrored what Lucid had to say about 2022 production levels. Specifically, as Lucid did last week, Rivian said it was maintaining its previous guidance for production, even in the face of continued supply constraints. They seem to really spark a rally after EVs. Wow, so I can't believe that Rivian did that. That's crazy. So, well, congratulations to investors. I mean, that's a good rally to have in this market, and they ran in the after hour. So I'll be curious to see if Lucid will run tomorrow as well. And then I was just gonna see like if my questions were answered. This one was answered. Yes, they're still gonna do the pure this year. We still don't have Dream Editions delivered. I think they kind of keep those as their trophies that they kind of give out at special events. And then we have no 2023 guidance. So that's fine. Hopefully we get it towards the end of the year. But those are the numbers. That's why Lucid ran so far. That's why Lucid ran as far as they did today, is because of that. So, yeah. If you guys have any questions, hopefully I can answer them. If you guys want to plug any numbers in, I'd be happy to do that. We're also we don't have any revenue from leases or any revenue from services or any revenue from battery technology, but I'm also not increasing these a ton every year. And I'm not doing taxes, so I think it's only fair to exclude those, and just especially because we have no idea what those will be. So that's how I get my numbers. And a lot of people just play stocks, I've just seen a lot of Lucid investors get emotional. Just why isn't I want the stock price to be higher? Well, you kind of have to make the numbers make sense. And the more I try to make the numbers make sense, the more confident I become as an investor. So I know that when Lucid gets near the $75,000 to $100,000, 75,000 to 100,000 cars, that's when Lucid will turn its first profit. Now, I think this year will be their make it or break it year. I know a lot of people. I saw one comment from a pretty popular investor on Twitter, and he said that Lucid was going to go bankrupt. And I mean, I think he's half kidding. I think that Lucid's far from they have how much on cash on hand? What was their cash on hand? Cash and cash equivalents 5.4 billion. Yo, what's up? They had 5.4 billion, and their cash they burned 500,000 in a quarter. So if you multiply that by 4, let's just say 500,000 times that's 2 billion. So they'll have at least until the end of next year, which is fine. They will have to probably raise cash, and I don't know if they'll do that, how they'll do that, if they'll dilute shares or what it'll mean. But those are just things to pay attention to. It's very possible. Let's just play. I want to play with one number really quick. So let's say that they add 400,000 shares. Let's say they go to 2 billion shares outstanding. I'll just change this. 2 billion shares outstanding. 200 million close. 1, 2, 3. It's 200 billion. Let's take away 2 zeros. Sorry, tired. It's 2 billion shares outstanding. It affects their share price, but not that. But it affects it by $100, which would be I don't know in terms of market cap how much that would be. But yeah, you can kind of see where the difference is when you add shares. It's not too crazy, but I don't know how much shares they would have to raise by. All right. Well, I'll make a video recapping what we just talked about and also why Lucid ran so much today. Yeah, I appreciate your support. It's been fun. I think these are the numbers that investors need to be doing. This, reading earnings calls, like getting back to the basics. I think 2021, I mean, I'm guilty of this. I've just tried not to turn into this. 2020, 2021 brought a lot of first-time investors, and I was definitely one of those. But getting back to the basics, like reading earnings calls and doing spreadsheets, making your own analysis, making your own projections, things like that. So that's what I think helps me a lot to be not emotional, is by just put like numbers behind it. And my numbers it makes like the market makes sense. Like we're seeing compressed multiples, and it sucks for a lot of us. And I just wish that I had known this a couple of months ago, right? Because I definitely wish that, like, yeah, cool. And that's if Lucid is trading for a 75 PE. They may grow into a much larger PE ratio. Cool. Well, appreciate you guys being here. I'll make another video and I'll post it shortly to give you guys an update. And yeah, you guys are awesome. I appreciate you guys' support. And like always, we'll see you next time. Thanks for watching.